how are we doing? So just trying to get my desktop sorted. Streamlabs did an update, the streaming software. Everything always goes wrong when they do an update. Never mind. Morning, Christian, Danny, Gavin, JC, Ian, David, Jules, Amy, Baggy, Virginia, Martin, Lacron, Tom, how are you doing? Everybody wide awake, ready to go. Another session. Hopefully get a nice clean break on the DAX again this morning. Not like yesterday. Right, let's kick off with news. So today is CPI day. Morning, Peter. And HBD. Thank you. That was yesterday, though. You're late. Morning, Gregors. Leshy. So, yes, today is CPI day for the Canadian dollar. So this is the main news of the week today. Canadian dollar's been very, very, very weak. The forecast figures are negative. So there's a chance if these come out as expected, 3.6s, we'll get a further drop on the Canadian dollar today. So we'll see what happens. The last couple of CPI figures we've had from the US have been a little bit hit and miss as to direction. So it doesn't necessarily mean if the CPI figures come out as a negative, it will actually drop, or positive, it will actually rise. So we'll see what happens. It's a lot more hit and miss at the moment because interest rates are at terminal rate mostly everywhere, we think. So we'll see what happens. But that's 1:30 this afternoon. So that's your main news today. We've got the monetary policy report hearings this morning for the pound, although unlikely to do a lot because we're waiting basically for the autumn forecast tomorrow. That's the main news for the pound this week. Although it's orange, I suspect there will be something in there that will move the market. So we'll see what happens. We've also got an FOMC meeting minutes this afternoon, or this evening rather, at 7 o'clock. So that's going to move the US potentially, but that is not a press conference. So there's three different types of FOMC we have. The standard FOMC meeting minutes, which is the least impactful. That's what we've got today. Then we have a meeting minutes with a press conference, which has more impact because they talk about what's going on in the meeting minutes. And then we have an FOMC with a press conference and an interest rate change, which is the big one. So this is the lower impact of the three, but it can still have an impact. So that's today's news. It's spread out throughout the day. We've had Aussie overnight, which was their monetary policy meeting minutes. There's a little bit of movement on the Aussie, not a lot. So if you look at the ADRs, there's nothing lit up from an Australian perspective there. A little bit of a bullish run, but nothing really dramatic. New Zealand rallied actually more than the Australian dollar. So yeah, there we go. So and New Zealand's had a good boost this morning by the looks of things. Big run on that. So yeah, so there's the forecast news. Overnight news, I haven't even had a look through this morning, so I'm scanning through now. Haven't had a chance yet. Oil. Nothing came out of the RBA by the looks of things that was important. There's nothing red to look at all there. NASDAQ reached 22-month high yesterday, which we know about because we were on it. We're just confirming they're going to carry on with PEP. So yeah, no other news really. And Bank of England saying that they may need more interest rate rises, which we kind of knew anyway. So there's nothing new there for overnight news. There we go. So 1:30 this afternoon is really the first news for the CAD. DAX so far, we've got 1.5 minutes to the open. So DAX basically no gap today. We basically just gapped down ever so slightly, filled, and we've run. So big drop at the open across all indices. The US indices also dropping very hard this morning pre-market. So we are very, very, very overdue a down day. Not just a down day, some kind of correction on this move. We've got this gap down here, which we gapped up and ran, basically. We haven't really undone any of that move at all yet. So there's been no profit taking on this entire leg. So we are kind of due some kind of correction. Could be today, we never know. But targets to the downside today, obviously, is going to be yesterday's low, which is a fair old way away at the moment. We've got a reversal in structure when we get to ADR today, but it's very difficult, apart from that, to pick any location for this to stop because it's been such a smooth run for the entire week last week. So we'll see where we go. But obviously, upside, we're looking at yesterday's high, previous day's high, being basically the same level. So there's your kind of double, triple top, or quadruple top really in this case now, isn't it? And then yesterday's low is a downside. So there's plenty of room in both directions at the open. So there's your pre-market range. We'll look at the ADRs and everything in a minute. Why has that stop loss not been deleted? Why? Every now and again, it leaves a stop loss in place as well. It's as if the script is just not completing for some reason. Keep an eye. So yeah, there's the pre-market range that I'm taking today is 25-minute pre-market. That's the first range, which is over the minimum. So upside is ever so slightly outside yesterday's high. So I'm just going to adjust TP1 down to the upside just below yesterday's high. Downside is absolutely fine. Loads of room. Not an awful lot of volume coming through this morning, though, by the looks of things. Quiet. Morning, everybody else I haven't said morning to. Not a lot of movement. So just quickly looking at the other indices. So yesterday, obviously, we made new kind of all-time highs across the board. So we rallied up the 15-minute pre-market broken. Looks like I'm long on the DAX. Not quite. Not quite triggered. So yeah, we've basically, from the CPI run that we had last week, we've basically gone sideways for 4 days, and then yesterday we slammed it. So all the US indices rallied out the highs. Again, I'd love to see a correction this week across all indices, just because that gives us that pullback to get that Santa rally underway, which we usually get in December. The more we rally into the beginning of December, the more likely it is we're going to get a pullback. So the less likely it is we're going to get a Santa rally. But everything made new highs yesterday. So all of these, very much the same, all due a very nice pullback at some point. It's unusual for us to get this much movement. This is 3 weeks sustained movement in one direction, no pullbacks. So just got to be a little wary when this pullback comes. It could be quite aggressive. So we'll see what happens. Can't quite get the order triggered on today. Thinking about it. There we go. So long the DAX. So target to the upside, not going for the full target because obviously we've got yesterday's high there. We've hit this twice now, 3 times really. well, it's multiple times, isn't it? So this is a very, very, very strong resistance. It's going to take a lot of buyers to run through that level today. So target below that is much easier to obviously achieve than trying to get something just above it. So we'll see if we get there, but not a lot of volume today. Little quiet. Morning, Mark. There you go, sir. Outro. Keep it up. Happy birthday. Yes, missed it yesterday. It's the big 5-0. Life goes downhill from 50, apparently. Everyone's told me. Morning, day trader. Come on. Let's get a wiggle on. Not a lot of volume today. We'll come back to this in a minute. Yeah. Not the most exciting open we've had. A little bit like yesterday's open. Obviously, yesterday we got a nice clean break to the downside. That was the only candle that moved the market yesterday. We then sat sideways for pretty much an hour and a half doing nothing. So hopefully we're not going to get another one of those. Very annoying. We got 1 hour basically of movement out of it. That was it. So we got to there and just sat there literally all morning and then decided not to go long, not to go short and go absolutely nowhere. Hopefully we get a little bit more than that today, but we'll see. Some alerts going off. Let's have a look at what they are. Probably ADRs. Yeah, New Zealand. So New Zealand dollar CAD moving. That's US dollar CAD. New Zealand dollar CAD moving to the upside. So very strong New Zealand dollar today. I did see some New Zealand news fly past. I think it was just trade balances, so not quite sure. Import and export trade balance. So yeah, I mean good figures on the trade balance, basically rallying the New Zealand dollar this morning, but I wouldn't say that's particularly impacted news. There we go. We're out the highs on the DAX. We're off, which is good. So we'll see where we get to there. So yeah, continuation rally there. So we've got a few ADRs today. We've got 3 to look at. New Zealand dollar CAD obviously has just hit. So that's your ADR hit to the upside. Short-wise on that, obviously just wait for a reversal alert to get in short. It is extended as well on the RSI. But again, this is off the back of this CPI figure from the US. Very weak Canadian dollar and very weak US dollar. Difficult to find an upside on this as well. Next real level you're looking at isn't until we get up to that high, which is over 225 ADR today. So there's not really any level there that you would look at and go, that looks like an obvious spot. We've got 2 propulsion gaps in there on the 4 hour. But yeah, kind of got plenty of room that today. So just be a little careful if you're trying to take an ADR reversal on it. It could well continue. That's a breakout as well from that 3-day range. So we've got obviously the main news this afternoon is the CAD CPI figure. So if that comes out positive, that is going to be down there somewhere this afternoon. If it comes out as a negative, there is potential for it to continue. So if it comes out as a negative, it's going to be pretty difficult to get 225 ADR, but it could do, as it's already done 100 ADR today. So there is potential for a resistance bounce up there today, depending on what that figure comes out at. So worth watching that today, the New Zealand CAD. The other ADRs we've got, which are also weeklies. These are also weekly range hits. Is that really a weekly range hit already? 136. Tuesday, isn't it? It is. Wow. Okay, so yes, that's weekly range hit as well. CAD yen, these yens not stopping. So absolutely getting creamed the yen at the moment, or rather the yen is creaming everything at the moment. So huge drop down into the monthly lows. This is a double bottom bounce, and this is exactly where we would expect to find some limit orders. So a really good spot, and we've got news this afternoon. So if that news comes out as higher than expected on the CPI figures, we'll get a rally off that CAD. So this is a really good buy spot down here. It's an ADR hit today. You've literally just had the reversal alert go in there. It is pushing down again though, so it might invalidate that low. But there's a lot of room to the upside on this. Very big move this down. And again, same as the indices, no pullback at all yet. No profit take move whatsoever. So there's a long rally, a couple of days potentially ahead of us. Jesus, look at that DAX. That is a hell of a rejection out of that propulsion gap. Do not like the look of that at all. So buyers getting absolutely trounced there. And it was selling off hard pre-market as well. So that's kind of confirmation there's a lot of sellers on board today. So we might get hedged on this today. We'll see if we can rally back up above that high. But obviously the buyer's not getting anywhere with that move there at all. So see where we go. So yeah, so that's really extended. That's your weekly range hit as well already. So that's 2 ADR days basically back to back. That's why we've got weeklies. So yeah, 72 is ADR. We put in 138 yesterday, and obviously we've done 76 today. So same with the US dollar yen. Again, yesterday ADR on this is 109. Yesterday we put in 187. So big moves. Again, same thing this morning on this one. You've had the reversal alert already, and the retest is now underway. So, I mean, there is a retest. It's a much smaller W pattern there. But yeah, that looks good for a long as well. Again, same thing on the US dollar yen levels. We're down at this. This is the intervention low, which was that previous low there, which was that previous monthly high, and that's where we've tapped into again. So this is basically where that move got stamped out by the buyers. That's where they seem to be buying again. So again, good opportunity for a retracement on that. If you measure this move and look at the potential pullback on it, you'd be looking somewhere around 38 as a shallow retracement into that propulsion gap there. 50% retracement covers that propulsion gap there. Again, so we're looking at that break, and then you've got that break there, which is that big propulsion gap, is the 61.8, 71.9 retracement. So if we're going to continue to the downside, that's a shallow pullback, medium pullback, and deep pullback somewhere into there. So these 3 propulsion gaps perfectly lined up with normal pullback retracements. So yeah, good looking long opportunity there on the US dollar yen. But you are obviously running in front of a steam train here. Whether or not it's going to continue remains to be seen. So those are your ADRs today. They are also all weekly range extensions. US dollar yen already on a Tuesday morning done 125% of its normal weekly range. So that's a hell of a move it's just put in there. So just be careful when you're running into something that strong. If we look at all the other yen pairs, you can see all the other yen pairs are fairly strong at the moment, but the main movers, the CAD and the US, are weak off the back of the US dollar CPI figure. So the market really sold off that US dollar move on the CPI, and it hasn't attempted to buy any of it back at all yet. So Swiss is also very weak. And you know, everything's weak against the yen at the moment. But the question you've got to ask yourself is it a pullback? We've had these potential strong moves from the yen before, and they haven't held. So that's the question. But this is a lot deeper. Look, if you look at the US dollar yen, this one is a hell of a lot deeper. We're looking at that type of move. But then that happened after. Could go either way, couldn't it? we will see. I've got a pending order up there. I didn't realise. Need to cancel that off. Right. So there's your ADRs. DAX has just had another attempt at going long and another smash back by the sellers from that propulsion gap. I do not like the look of this long today. US indices all selling off. So moves down on the Dow, the S&P, and the NAS. I'm getting out the longs. Don't like the look of that at all. Just taking a small loss. The longs. If it breaks short, I'll go short on it. I just don't like the look of that at all. That's an inside bar. But those wicks are, I mean, if it breaks long, it breaks long. But those wicks do not look like you want to be going long, do they, at the moment? But we'll see. I'm not going to hit the short button. I'll wait for a break to go short. But that doesn't look good. So this is where the they sold off literally at the end of the market yesterday. We've opened up and immediately sold off. The market's tried to rally and make a new high of the session. These guys that entered sells here have basically re-entered the market at this level. So they're selling this area heavy. So it's going to take a hell of a lot of buyers to get through this level. Very, very difficult. As you can see, it's just proving very hard to get any traction. And if it does go, it goes. That's fine. But I'd rather not get hedged on it and have to deal with it when it looks like that. It just looks obviously short at the moment. But also, the other thing that I'm concerned about is this. I do not want to sit through this crap again. Yesterday, we sat through that for 2 hours yesterday, or an hour and a half, and did nothing. So I'd rather not sit here and babysit this for an hour and a half, just for the sake of potentially getting a break. But looks like it's trying to rally now. We just tried to break the pre-market lows on the NASDAQ. Or rather, tried to break the lows on the NASDAQ, and it looks like it's failing. So we'll see where we go. But stay in it if you like. It, you know, could go either way, but that just looks hell of a bearish today, doesn't it? We will see. Right, let's go and look at the RSIs while we're waiting for the DAX to make its mind up. But I'm out of the longs. Let me catch up on the chat. Morning, Dion. Already said morning to you, haven't I? Outro, got your TP at 1R. Good job. That's probably the right thing to do today. Right at resistance that's been tested multiple times. I think we could struggle to break that. Yeah. So the DAX basically, I mean, it's having another go now. So maybe I was wrong to get out of that, but that is a strong resistance. In 2 days, we've failed to get through it 4 times. So even if we do break long, I wouldn't want to take it above that level. So the fact that that has failed 4 times, if the buyers do give up on it, there is going to be nothing but sellers today. And that should test that level very easily today. If not, you know, start some kind of pullback, because this is definitely a brick wall. There is an iceberg sitting there and they are not getting past it, but we'll see. This is the difficulty with reading price action on CHOP, basically on 5-minute time frames. You are reading the order book for 5 minutes at a time. That has no bearing on today's activity. Just the fact that there's been 5 minutes worth of buyers that couldn't get through, another 5 minutes worth of buyers that couldn't get through. That tells me there's more sellers there at the moment. It doesn't tell me whether or not HSBC are going to hit the button with 25 million long and smash that in the next 5 minutes. This is a 5-minute candle. It's telling you what's happening in 5 minutes. It has no bearing on the next candlestick whatsoever. Just tells us for 10 minutes, there hasn't been enough buyers. that doesn't mean that the guy sitting there eating his donut at Barclays isn't about to press the button. So you know, every candlestick has got the same probability, 50-50. But if it's going to continue in that vein today, obviously, it doesn't look like it wants to go, does it? We'll wait and see. Morning, Ismet. Gengar, morning. I always watch you from the USA, 3 a.m. Go to bed. Don't trade index or Forex, but I like to see the coverage from London session. Okay. So you don't trade indices, you don't trade Forex, but you like watching me trading indices and Forex. All the buying just gets absorbed, yeah. Morning, Darren. Couldn't use the volatility index to decide how big your TP should be on the SIH. I do. It's called ADR. The volatility index measures the volatility on a period of time. ADR does exactly the same thing, which is why I use ADR. Right, let's look at the RSIs. There's quite a few RSIs to look at. We looked at all these yesterday, and they look pretty much the same as yesterday, to be honest. The CAD's sneaked in a little bit more. There we go. It looks like we're breaking short again now. If you want to hit the short button right now, you could do. I'm personally going to wait for a break. And then I'm going to monitor it, because obviously I've got no hedge the other way. But if this hasn't gone long, so if it's going to go anywhere, it's going to go short. Could obviously go like that. But Forex traders never sleep. They just pass out on laptops. That's good. I haven't got a laptop to pass out on, but if I did, probably would. Yeah, ADRs. Aussie dollar CAD, we've looked at this one already. This is rallying. I've got too much size on this now, annoyingly. I got into an entry on this yesterday because the reversal alert was 1.5 pips out from minimum distance of 75% of ADR. It then got me into that trade, immediately pulled up, gave me a reversal alert at the right distance. So the EA took a trade, and obviously then it's decided to run away. So I've now got double the exposure on there. Good thing is my average is nice and close. So any kind of pullback, I'm fine. But yeah, I've got a little bit too much size on this, unfortunately, now. I'm just going to move my TP up into that propulsion gap there now. Just these also. So TP's basically moved up into that propulsion gap. I have got an exit here, which is in profit at 125 ADR. That's an obvious resistance, which will potentially turn into support, which is that propulsion gap. So propulsion gaps, you will usually find at support resistance levels, because they are accumulation breaks, and accumulation has highs, i.e. resistance. So that's why those are telling you that they were a breakout. So yeah, basically that's the target initial to the downside I'm going to be watching today. I'm going to put my TP down there. Only reason being, we've got CAD news at 1:30. If that Canadian dollar news is ridiculously high CPI, we could have a ridiculously big move. So I will take the ridiculously big move if it happens. If it doesn't happen and we just get that sort of price action down to there, I may well get out there. I'll have a look at the P&L and see what it's like. But that is still very nicely extended on the 4-hour look. Huge run so far, and it's not stopping. They are not liking this Canadian dollar at the moment at all. Oil's doing all right now. So I got out of all the oil positions yesterday. It's holding up, oil. So this is obviously Australian dollar rallying, isn't it? Yeah. So this is the Aussie dollar rallying at the moment. New Zealand dollar rallying twice as hard, look. So Aussie and New Zealand both pushing, but mainly New Zealand dollar. So that's really nicely extended on the 4-hour again. We got an extension back here, not quite high enough. That was your last extension above the 80, which is where we are now. So we'll be looking for a good sort of day, half day pullback. So we should be able to get back down into this support. And then obviously it can do what it likes from there. But if the news does come out as negative this afternoon, that CPI figure comes out lower than forecast, this is going to rally to the upside. So on this one, you'll be looking for entries higher up. So somewhere that's a fairly decent support resistance level, and so is that, obviously. So there's two areas coming up. This area here, which has been respected multiple times. And then we've got this area here, which again is the most recent untested resistance, which is 175, 200 ADR. So you've got potential bounce points coming up there, which will be where that leg will start to come back down from, possibly. So good extension on the 4 hour there. Aussie dollar, US dollar, very much the same. Huge extension. We had the 80 level there, which you can see I took that one. And then got back into longs, got out on those longs. Those were hourly entries, but 4 hourly as well. So yeah, plenty of nice trades on this, actually. It's had lots of movement, lots of trades, which all worked out within 2 positions as usual. This one, obviously, I'm already in short, got 2 on this. Average is ADR. Again, this will be affected by the Canadian this afternoon, but nicely extended on the 4 hour. Good divergence. Yeah, so we've got bearish divergence in play. Price pushing higher. RSI is weaker. So potential for some kind of pullback on that. Target is that propulsion gap at the moment. We'll see where we go. So that was an entry from yesterday. So I'm just going to move my target down to the top of that propulsion gap. There. CAD Swiss also extended on the 4 hour. This one I've been in for ages. Can't get out. It's just the most horrible price action. I did some drawdown control on this yesterday just to take some size off, as you can see. So I made a really nice profit on oil, and I used half that profit of oil to scale out of some of this. So I've taken that one off completely, taken that one off completely, and I did a scale out on one of the other positions as well from there. Excuse me. Just to get the average down. So the average is now 175. So yeah, looking for a pullback on this. Again, looking for that CPI. I could really do with that CPI figure coming out 1 or 0.1% higher than forecast. So we're looking at basically a 0.1 on month. The year on year, basically, we're looking at a 3.6. So we're looking at a slight decline annually, and we're looking for the monthly to increase. If we could get a 0.2 there and a 3.6 there, so if we get a forecast and a better than forecast month on month, that will give the market a little bit of encouragement, and that should give us that rally on the CAD, which is what I need. So we'll see where we go. But so we just rolled over a little bit there and pulling back. So they're buying that initial move, and they're selling out of there. So that's your battle zone at the moment between these 2 areas. So yeah, extended. I have got an aggressive drawdown control position poised, ready to go on an hourly break. So this is the hourly support rectangle formed yesterday afternoon. We haven't broken that yet, so I've got a pending order there, which is an aggressive drawdown control position. So that's taken with the EA yesterday. So if we can break that high, I will be getting into another position, which is going to bring my average down nicely, and I will be looking to get out in that accumulation. I just want out of this now because it's wrong and it's taking too long. So. But that is nicely extended still, obviously, on the 4 hour, but it's been extended and embedded for the last week. So just waiting on that one, aren't we? CAD yen. So these yens, that's the Swiss yen. These yens, no idea when they're going to stop. Swiss yen just hit weekly range, okay, as if like clockwork. So yeah, big moves down on all these yens. This is an ADR hit, obviously, today. We've gone straight through that monthly level look, bounced off of it, limit orders triggered, and they've just run them straight over. So CAD yen, huge extension on the 4 hour, down below the 80 level. We're down below the 25 level. Almost we were down below the 80 level this morning on the hourly as well. So these 4 hour 80s, the 80-20 levels on the 4 hour usually are very good levels to take trades from. Yeah. So we often, most of the time, we find they are the exhaustion points. It's not often you get above the 80 or below the 20 level and you don't get that reaction. The market is just so exhausted by the move. It just, you run out of people which are willing to take the opposite side because it's just, when is this going to stop? You don't stand in front of the freight train. As soon as that happens, the buyers start to get out of their, or either in this case, the sellers start to get out of their positions. They start taking profit, which turns them into buyers. And then we get that fast profit take move. So very, very big extension there. We have broken through that level. Your next support could be any one of those levels, basically. So this whole area from there down to that monthly is a potential area of support. So one ADR basically of potential here, which will drive us back up into that closest propulsion gap. So it looks good. CAD yen 125 of its weekly range just hit now. So yeah, very extended. US dollar yen exactly the same. So these are the ADR hits we looked at. Swiss yen has just hit ADR as well. So again, this yen is not stopping. They are not stopping. Glad I'm not trading this at the moment. New Zealand dollar Swiss ADR. New Zealand still going nuts as well this morning. Loads of movement today, isn't there? DAX has just pushed back up. Retesting highs. So far in the first 30 minutes, we have literally gone nowhere. Again, really choppy open. So that's new higher session. So looks like we are going to come and retest this high. This could be a lovely short today. Watching for price action up at yesterday's high. I might take this manually. Just going to drag these sell stops up a little bit. So I'm going to trail these sell stops basically that I've left in place. Just going to trail basically candle lows. Yeah, so wait for this candle to close. Obviously, it's got a bit of time yet. Another 3 minutes on it. When this candle closes, for example, it closes there. Move that up underneath there. And if we come back down and we break the low of that candle, take a short. Because this area, as we know, this is the fourth attempt at that high. If it breaks that, it's gone. If it doesn't break that, it's coming down like a ton of bricks. So this is a very, very, very strong resistance we're now having another crack at. Nice looking short. This is the type of short, when you see these forming, if it works, you know, these are great stop loss plays. You know, when you're looking for setups, you want high probability setups, something that they've attempted to get through 4 times in a day and failed. And then the next day they've had another go at it and failed. The next day they have another go at it and fail. There's only so many times you can knock on that door before they go, screw it, we ain't getting through. There's only one way to go. These are the types of plays where if you can get them on really tight like that and add, you could basically hold this potentially for days and make a massive amount of money. If you can hold it, that's the trouble. Trying to hold plays like this is the hard bit. But yeah, this is certainly not looking like buyers can get through that level, does it? So we'll see. There we go. More rejection at that high at the minute, but we'll wait until this candle's closed. Got 1.5 minutes. Hasn't got there yet, so I want it to test this level before I get too keen. Just move my break under that level. We'll come back to that in a sec. Euro yen weekly range has just been hit. New Zealand dollar, US dollar, ADR, Euro yen, yen's mental today. So New Zealand and yen today are the big movers. ADR hit there. So there might be some. Yeah, there's no hourly. So basically, I'm trading the hourly. So Euro CAD potentially, Euro US, Pound CAD, and New Zealand dollar CAD could be first entries if you're not already in them. So where are we? New Zealand dollar Swiss. Swiss yen. We've looked at CAD yen. Swiss yen, now ADR as well. Again, don't really want to get in the way of this yen at the minute. Euro CAD. So that one's out the highs. We've got 4 positions on that one at the moment. Average is 125 ADR, so that's easily achievable. Again, Canadian dollar needs some positive news on the CAD this afternoon, and that will be out. But that's nicely extended on the 4-hour. Again, above the 80 level. We had a test above 80 there. Nice little pullback. Again, 50% retracement on the move. We're above that level again, so you're looking minimum 50% retracement or that entire move, although that's kind of a profit take on that leg. So market structure is really nice and clean on this. Low, high, higher, low, higher, high, higher, low, higher, high. Looking for a higher low. So that's extended on the hourly as well. You're above, just about to get above that 25 level, although it's running into resistance at the double top. That's a really good rejection again on the DAX. I'm going to get in with one. And I'm going to add. So just taking a smaller risk, and I'm not. The SAH today is not happening. So no, I do not want to get hedged in this because it's so obviously wanting to go short and not wanting to go long. It's much better just to take a stop loss trade on this today. Short one. If it's going to break that high, it's going. So if it basically has another attempt at that high, I want to be out above that high. So stop is above there. I'm not going to put a physical stop in, but that's where I would exit. Could hedge it there, but that's a pretty big hedge. So it's bigger risk than normal to hedge it. And the trouble with the upside move is very difficult to pick an upside on this. If it does break out, it could well just fly to ADR. So much rather get interested in a little low risk short and see if we can get some traction going short on it. Because if it does break short, it's really easy yesterday's low target. And then if yesterday's low breaks, look out below. Remember, we're on a massive multi-week run. It's going to be a big profit take. So see where we go. But yeah, it's triggered short. Euro CAD. So that's extended on the hourly and the 4-hourly. Euro US dollar. Also 4-hour and hourly RSI extension. Got 3 on that, sorry, at the moment. Very difficult first entry on this one because my first entry was 2 ADR between the first and second. So the average is actually already down at beyond 150 ADR, even with only 3 positions on. So very tricky entry this off the back of that CPI number. So I'm targeting at the moment a very tiny profit, more of a get out of jail free card, basically, because of this CPI figure. If we get positive CAD, there is a chance, obviously, of the US powering up as well. So I'd be happy to get out down here on all the positions and just take a small profit off because this is not the trade that I wanted. So exit there. That's extended on the hourly. We've been extended and embedded. Same with the 4-hour. Extended again. Nice divergence. Again, bearish divergence. RSI weakening. Price pushing. So, but I'm not going to get more keen than that. If we can build a range here and this CPI propulsion gap holds and the US dollar is going to continue to weaken, that's a nice exit. So I will take it. Pound CAD also extended. 4 hour coming up to monthly resistance. Not very good monthly resistance. That is where the high of that particular month was, but multiple levels there we could react at. So this is kind of not a very good resistance at all, really. That would be much better. So that's pretty much 3/4 of an ADR today, and then we're looking at 150 ADR to the upside. Again, Canadian dollar news 130. It's either going to do that or it's going to do that on that CPI figure. So if it pushes up into that resistance, good selling opportunity. It's extended on the RSI. We will be extended on the 4 hour, on the hourly by then as well. So if we do get a negative reaction to the CAD this afternoon, that pound CAD is going to push, and I'll be taking a short on that one. Or rather, the EA will be. So pound US dollar, that's a 4 hour RSI extension, only just extended. We've already had an extension out of that, and the profit take move. Again, this is US dollar, so that was the CPI move. Market structure very clean on this. So you got nice support and resistance levels coming up, and this big, long, multi-week accumulation with these propulsion moves. So there's lots of resistance coming up for that one. Okay, so DAX has held bearish. Not a very big move, though. So loving these wicks, not loving the speed of the movement to the downside. We'll keep monitoring. Pound US dollar. So New Zealand dollar CAD. So I just realized I haven't taken this short over here. What are we? 142. Yeah, so New Zealand dollar CAD, we know obviously New Zealand today has got massive strength. Canadian dollar very, very weak. Again, great bearish divergence on RSI. We've just come up into this propulsion gap. So there's two propulsion gaps here for the 4 hour. Not great. There's a little accumulation there before the break. That one was kind of more of a downward move, which accelerated. So neither of those propulsion gaps are particularly exciting. But that level is, which is 225. So we've looked at this already because it's an ADR hit, but it's extended on the 4 hour. We're extended on the hourly. I've already got two shorts on it. Third one will be going in today. Ideally, before the news. 59, so that will definitely get me in. So this reversal alert will be entry number 3. In CAD. And New Zealand dollar, US dollar. That one's also extended hourly. Sorry, 4 hourly, not hourly. We had the short there last week off that extension, which was nice and easy. So it's just about getting extended now. Again, this will move off of the Canadian dollar this afternoon. So there's an opportunity for a short there. Again, drop down, usual stuff, wait for a 5-minute reversal alert. That's also an ADR reversal today as well. So that'll be your entry. And US dollar Swiss. So this one obviously extended and the 4 hour. I've got 3 longs on this at the moment. Itchy nose today. We've gotten absolutely nowhere on this. So the CPI move gave us our first entry on the H1 RSI extension. As you can see, this thing, since that initial CPI move, hasn't managed to get above the 50 level on the RSI. There's been absolutely no strength whatsoever on that US dollar, and the Swissie's just been grinding it away. So I've got 3 on this now. Second entry was taken day after CPI. Third entry was taken yesterday. Target, I'm remaining there. TP in place on that one. So my average is basically in the middle of this accumulation now. So if we can get a decent move off the Canadian dollar this afternoon, we should get a little bit of strength coming through on that US dollar. So those highs, if we test 125 ADR today, I may well take that off. It all depends what's happened with the rest of the Canadian dollars. But if we do get a decent move, that is enough profit, I think, for me to take off of these. These have been a week now, and we've literally gone nowhere. So the thing I'm worried about is a continuation of the US dollar weakness of that CPI number. If we get the CAD CPI number doing something similar, that's just going to double weaken it. So I'm just looking for opportunities to get out of these with small profits, just as a kind of get out of jail, because what we're looking for, don't forget, is market structure pullbacks. Yeah, this is a fundamental shift potentially. It's not going to have a market structure pullback. They don't need to take profit on this if they want to continue going short. So they just will add to their positions. So these are the ones you kind of want to not get greedy on. Get out. If you get a decent exit, take it, because if it does go that way, you could be in a multi-week squeeze. So just looking for opportunities to exit. So that's extended on the 4 hour nicely. And again, this one, again, you don't often get these moves off of the 80s and 20s where you don't get these pullbacks. On a fundamental shift where we've decided, actually, no, we don't like the US dollar anymore, there's no reason why it won't just stay embedded as we get more selling pressure coming in. So just be careful with those. And US dollar yen we've looked at, obviously. Coming down like a steam train back into the intervention low, which is that previous high. Support resistance. So that's a really good looking long as well. DAX, lower low and lower high. Still bearish, but not really made any movement. So made a lower low and a lower high. But we are slowing down dramatically, aren't we? We know the sellers are there, but not enough of them this morning. It's very weird how it goes, isn't it? The DAX will have beautiful days where we fly for days and we get an entire week of clean breaks and everything's fantastic. And then that week, the US dollar does nothing. There's no US index movement. Then we have beautiful days like yesterday where the US indices fly like crazy. The DAX has put the brakes on. Yeah, DAX is now the one putting the brakes on. Previous week, beautiful moves. Can't make its mind up, can it? Anywho. Right, let me catch up on chat. Mark, read an article that showed MQL5 runs much faster in code than MQL4, almost as fast as C++. Not in my experience. MT5 is... You mean MQL5? I don't know. MT5, basically you're saying MT5, MT4. In my experience, MT5 is horrible. But I don't know. I don't think there's much you can do about the high volatility at the open is not going anywhere. So it is what it is. I might look to go short on the DAX from 15904. Yeah, that's where I'm breaking. That's why I'm entering second position. So if that low breaks, basically, there's no structure here at all. It's just chop. It's mess. Absolute mess. It's 50-50. Total 50-50 shot at the moment. There's no structure. You got a low, a high, a higher low, a higher high, a higher low. Potentially, we're going to put in a higher high. But the structure is so unbelievably tight. It's pretty much a range, isn't it? Not. So yeah, I mean that would be a new low, which would change the structure short again. But realistically, it's just that, isn't it? With a load of wicks to the upside, which looks bearish. So who knows today? It's a mess. Every time you see a candle like this, you go, oh crap, it's totally wrong. But then every single one of those candles was a big green one at one point. So was that. So was that. So was that. Yeah. We got 1 minute 35 on this. It looks really bearish at the moment. This could end up like that. But if we break that high, then yeah, we're probably in trouble. So I'll be jumping out. Tricky one today. I get missed pendings and stop loss left at times. Just volatility I put it down to on MT5. Yeah, it's not just MT5. It's just in general. That's the only problem with the MetaTrader platform, and I've only really discovered this problem since I've been trading the SIH strategy, is there is an obvious pipeline problem, which I think I haven't really got a lot of experience in other platforms apart from futures platforms, and I have input lag on futures platforms as well. I've had it on Ninja, I've had it on Jigsaw, I've used Rhythmic as well, which is what feeds those two anyway. I think it's just a general problem, but it's just more prevalent when you're trading this specific strategy because you are trading at the highest volume point of the day. So it just becomes a lot more obvious. I think it's always there, but on any higher time frame strategies or strategies that trade 5-minute charts not around high volume and volatility, you don't get the problem, do you? Because there's not that many orders going through. There's not that much coming through the pipeline. I think it's just an issue you can't really get around. There are ways and means of reprogramming EAs to do things in different ways, but every single one of those that I've looked into will cause slippage. And when you're trading a breakout, slippage is something you don't want because it reduces your risk reward and increases the risk. So, not using pending orders and taking market orders. If you ask for a market order there, price moves to there, they requote you. Then by the time they've requoted you and the EA said, yes, it's moved to there, you're entered there, you wanted your entry there, your TP's there, suddenly 50% of your profit has vanished. So every backtest you've ever done in the past, destroyed. So I don't think there's just no solution. There's always other ways you can do things, but I don't think any of them actually has a fix. Just got to deal with it, which is why it's a manual strategy. Well, it's not a manual strategy, but it's, this is not a set and forget strategy, is it? It's, today I got out of this because of what I was seeing on the chart. You've got to be able to look at things and understand what's going on and read the price action. Whether it's right or wrong decision is irrelevant. That's what I think should be done today. If I'm wrong, I take a loss. If the EA was left alone, it would now be sitting in profit, wouldn't it? But after 25, 30 minutes of nightmare pain, again, it's exactly the same as yesterday, isn't it? Exactly the same as yesterday. Just a choppy mess. There's no profit to be had. We will get a move at some point. Probably around about an hour and a half in. Whether it's that and that, or whether it's just that and then that, we'll wait and see. But at the moment, no one's in control. What about GU? Have we looked at GU? We've looked at GU. It's 4-hour RSI extension at the moment. So there's a support resistance coming up here. Right about where we are now. But 1:30 this afternoon, that's probably all going to change. Morning, Bradley. Can you show us how to test the SIH on the strategy tester with the DAX? Show you how to test it? Will you just put it in the tester and test it? What do you mean? What do you mean? Do you mean system parameter permutation testing? So with that, all you do is basically turn on optimization, pick the time period you want, and set the optimization. So basically all I did with most of my testing was mainly test TP variations in 0.25 increments, I think it was. Up to 6. 3. And then, oh no, sorry, that's trading stop. That's not the TP, wrong one. There we go. TP, so 100, and that was in, no, it was in 0.5s up to 3, and then 200 in 5s up to 5. That's as far as I went, up to 5R. But you can test whatever you want. Entirely up to you. That's what backtesting's for. What results did I get with the current set file that it's on? I don't know. Two and 5 and 2 and 2. Oh, wrong spreadsheet. Uh, 1.82 return on drawdown. Doesn't really help you much, does it? It doesn't matter what you use. It will range from, it'll be one of those results. I mean, the 141 out of 150 tests on that particular test, which was TP variations and loss recovery percentages, 141 out of 150 tests were profitable. This is, I don't, you know what I'm like? I don't believe any of this crap. It's all a load of crap. Backtesting is crap. Yeah. What's happened over a period of time in the past hasn't got anything to do with the future. Because everything that you test, every single candlestick you see here has never been repeated and never will be repeated. That order of price, open, high, low, close on every 5-minute interval that you see on the DAX there, go and stick it into AI as a picture and say, find me that in the past. It won't find it. So every backtest you do is going to give you a result with a setting in the past that is never going to be replicated. What you're looking for in backtesting, and why I don't really care what it says as a result, what I'm looking for in backtesting is if I use a break there, or there, and there, or there, which of those is profitable? If all are profitable, it doesn't matter. Slippage is irrelevant and it doesn't affect the profitability of my strategy. So if I take 150 tests with different offsets of the opening range, and then I test the 5, 10, 15 with all those offsets, and they all produce profit, I know I have a robust strategy. Because it doesn't matter whether I'd have got in there today, or there today, or there today. Over the long term, they would have all been profitable. Is it getting out at TP1, TP2, TP3 better? Don't know. Some days it is, some days it isn't. Overall, though, every single one of them returned a positive result. So the robustness of the strategy is there. Is it better to use a loss recovery target of 10%, 20%, or 30% of whatever your initial TP was, which again will be different depending on whether you set a 1R or a 2R target? They all are. So it doesn't matter. So I know that taking an aggressive exit is profitable, regardless of whether you target 10, 20, or 30% of what you initially closed out. That's what I use backtesting for. What that number is that appears in that spreadsheet, there or there or there, is never going to happen again. But I know that it doesn't matter which TP targets I use or what loss recovery targets I use. At the end of the day, over that test period, every single one of them, bar 9, was profitable. Works. You know, this is why every backtest you see on every strategy you see is a load of crap, because it's just irrelevant. Yeah. Backtesting doesn't include volatility. Mine does, because everything I do in every strategy I trade is all based around ADR, which is volatility. So yes, mine does include volatility, because every single break here, every single range I'm analyzing is based on the average daily range of the instrument, which is the volatility of the current instrument over the last 2 weeks. So I do use volatility because it's the most important thing in trading. You cannot have a strategy that has a 10 pip stop loss and a 20 pip target on multiple instruments, because a 10 pip target and a 20 pip stop, or whatever, whichever way around you want to look at it, is totally different on each instrument, isn't it? This has got an ADR of 158 points. Yeah. So if you use the same TP and stop loss on that as you do on the NASDAQ, which has an ADR of 219 points, or on the Dow, which has an ADR of 316 points, you are going to get very different results. So if you base all of your testing around a percentage of that, so I will have my stop as a percentage of the average volatility and my TP as a percentage of the average volatility, and I will analyze the range based on a percentage of the average volatility, you can apply that strategy to every instrument that is tradable on the planet, and it will have the same results, because a percentage is a percentage. 10 pips is a very different thing on that instrument as it is on the DAX. Yeah. But go and look at the US dollar ZAR. 10 pips is 1 tick. Yeah. Go and look at oil. 10 pips is 1/3 of its daily movement. Go and look at pound New Zealand. 10 pips is not, it's like that does 153 pips in a day. It's a tiny piece of the movement. Yeah. Oil, it's that much of the day. Pound New Zealand, it's that much of the day. How can you possibly use the same measurement on instruments that move with completely different movement types? You can't. And also volatility changes, which is again why you need to use it as a measurement. So if you look at the DAX, yeah, if we look at the DAX in January 2020, ADR was 147. Yeah. As you skip through, look at those ADRs change. 213, 190, 166, 152, 151, went down to 100. So we've already varied 100% of its range. 220 we're up to now. Now we're back down to 134. Now we're up to 320. We were down at 134 a couple of weeks ago. Now we're up at 517. Yeah, you have to adjust your targeting, your stops, your take profit, what you're measuring with what the instrument is doing, and the instruments change. So the 972 is now the ADR. We were at 134 last month. Yeah, so everything you do has got to take that into account, which is why a system parameter permutation test based on average daily range will always work, because it's measuring what that instrument is doing at the moment. Yeah. In the Santa rally, your volatility is going to be twice as high as it is in November if the Santa rally happens. But if we're using ADR to measure where we should be getting into and out of our positions, you're not going to have a problem, because it's always going to be relative to the instrument and the instrument at that particular time of day. But even so, backtesting is still a load of crap. As I say, it's not a load of crap. It's a fantastic thing, and it's the most important thing in trading as far as I'm concerned. but only to demonstrate an edge and a long-term edge and a long-term profitability in variations within a strategy. That's what it shows you. Now, I'm never going to give anybody a set file and go, this is the set file to use. Here you go. Here's 3,000 set files. They all work. Pick one. Which one's the best? I don't know. Where's price going tomorrow? Should we take the 5, 10, 15 or 20 minute opening range today on the DAX? I don't know, because it hasn't happened yet. You're asking me to predict the future. I can't do that. No one can. But I can tell you in the past, it doesn't matter which of those you'd have taken because they all worked. So you pick one. Don't ask me. I don't know. Which way is this going today? Is it going to test that high or not? No clue. At the moment, I'm sure I'm either going to be wrong or right. My back testing isn't going to tell me which way to go. My back testing is just going to tell me that it doesn't matter whether I go long or short. If I hedge it and let it run to 3 to 5R, there's an edge there. That's all I know. I don't know anything else apart from that. No one does, because I'm not a bank. I don't move this thing. I don't know who is pressing the button at the moment. And I don't know who is sitting here. I know someone is sitting here with an iceberg order much bigger than every other bank. I can see, because 5 times now we've tried to get through that level, and every single time we've got there, one of those institutions has hit the sell button so hard they couldn't get through it. What am I expecting to happen when we get back here? The same thing, because I've seen it before. My back testing hasn't seen any of this because it's not happened before. Go and show me a time and a chart that looks like this, with a 4x attempt on a high followed by a second attempt the day after, with a choppy range approaching that high on the day after that. You won't find that chart anywhere. So how could a backtest possibly tell you what you should be doing now? Can't. It's random. It's a 50-50 shot, up, down. But we do know that instruments move in volatility, which you can measure with what the average daily range volatility is of the instrument, which is why we use ADR in everything we do. This is why the ADR indicator exists. Stuff that goes beyond its average daily range is telling you something. It's not telling you whether you should go long or short. It's telling you that this is an anomaly. This is not normal. On average, we don't do this. So it means that something's happened. Right. Are we approaching a level that we might find some sellers at? Yes. And we're way beyond our normal range? Yes. They're ready to take profit? Yes. Let's short it. But backtesting, again, what's the best level to take? I get asked that question all the time. Should I take the 100, the 125, the 150, or the 175? I don't know. We've never been there at this time with this price action before, these support resistance levels. I couldn't tell you. Who knows? I can backtest it for 10 years. I can backtest it for 100 years. All that data is irrelevant because it's not going to happen again. You might get the odd day where you get very, very similar price action, obviously. But they're profitable as long as if you backtest 1,000 variations of a strategy and 990 of them are profitable, or 900 of them are profitable, you've got a 90% chance of that strategy being profitable in the future. That's all you can ever get told. Which setting to use is never, ever going to be known, is it? Good morning, Potgoater. Have you started trading, when you started trading 16 years ago, what made you pick trading as a profession? It wasn't, it was a hobby. I would never pick this job as a profession if I'd have known what I know now. That's not a very good selling point, is it? But no, it was a hobby. It was to make extra money. When my first child came along, I needed extra cash. And I was like, right, same as everybody else. These guys have all got Lamborghinis. I'm going to go and find out how they got those Lamborghinis. So I bought everybody's course, everybody's indicator, everybody's EA, and then realized that those guys with Lamborghinis had Lamborghinis because they sold courses. So then I decided not to follow that crowd and do my own thing and find out how the banks did it. Because the banks are the ones really that are driving the Lamborghinis. So therefore you do what they do. Never thought about trading at a firm. No, you need qualifications for that, and I'm too old. If you want to get into a bank, right, on a trading floor in a bank, DAX is still not doing anything. If you want to get into a bank, on average, a bank depends on the floor, but an average bank trading floor will have 20, 30 prop or speculative traders sitting on that floor. Yeah. Every single one of those jobs, there's 10 to 20,000 people at college and university doing qualifications which qualify them for those 20 to 30 jobs. Yeah. Every single person sitting in those jobs, every single day they get into that office, if they do not perform and hit targets, there's 20,000 people willing to step into their shoes. That is not the type of environment I want to go and work in. Yeah. Some big prop firms in the city will have hundreds of traders trading very small pieces of the pie. These people can't even get those jobs. Yeah. So it's just not a nice industry to go and work in at all. It's very, 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 very hard to get into. There's hundreds of banks and institutions, yeah. So there's hundreds of thousands of trading jobs available, but there are tens of thousands of candidates going for those jobs. Yeah, and most of them are in their 20s. So I was in my 30s when I started doing this. Very volatile career, yeah. And it costs a lot of money. I spent an awful lot of money blowing accounts to learn how to do this. That's the thing. When you go into when you go and work in a bank, the first thing they do is they sit you down in front of a desk, basically with a ladder on it, with bid and ask prices, and they tell you to watch it for weeks. You just literally watch the ladder. We watch price going up and down for weeks. And when you understand what drives this, they will then maybe give you a few $100 to have a play around with, see if you can come back with a profit. Yeah, most people won't get past that because what they'll be looking for is a reason. No reason for this to go up and down apart from the imbalance between buyers and sellers in the market. Yeah, the reason these wicks are here is because people tried to buy it, but there was more volume of cash going short than there was going long. That's the only reason that candlestick has a long wick on the top of it. On the ladder, you see price fly up and you see price fly down. Most people will be looking for a reason, an edge in there. There isn't one. Yeah, you hit the buy button, the odds are 50-50 on it going up. As long as every time it goes up, you take your order off at a higher point than when it goes down, that's the only way you make money. What they're looking for in people when they show them the ladder is, can you identify that there is no way of making money out of this apart from using risk reward? Yeah. Never go into a bank with a candlestick. They don't even know what they are. They don't exist. Yeah. It's a horrible profession. I know people that have worked in banks and they couldn't wait to get out. Just not good. Same as in brokerages. Brokerages aren't fun places to work either. Cutthroat as everything else. Every person like myself or like anybody in this room that goes to a brokerage and deposits X thousand in there, that person's job, the person that is executing your orders and monitoring your account, their job is to take your money away from you, yeah, and take a commission, take part of your money away from you. Their job is to rob you. There's no nice jobs in this industry apart from retail, sitting on this side of the screen and going, that's it. No fun. This is why my channel has like 98 people sitting in it, because they don't want to hear it. I'm not going to lie. Franco, British Thanksgiving Day is 4th of July. Sorry, bear with me one sec. Sorry, I'm back. I'm going to London on Friday. I'm not here Friday, by the way. No live rooms on Friday. Again this week. Second part of my birthday celebration, going to London. So just booking the hotel room, and it needed my code from my phone, obviously. Yeah, British Thanksgiving Day is the 4th of July. What? Virginia, you're talking to Franco. Don't know, missed that bit. I think when I graduate, I would like to go and try to get into a prop firm or on an energy desk. Yeah. In banks, you have multiple desks. So when I'm saying about the, the 20 to 30 on a desk, that's on a desk. There's multiple desks. So you will specialize in FX, or you will specialize in commodities, or you specialize in bonds, or you'll specialize in commercial transaction. You'll specialize in something. So every trading desk has a kind of specialism that you will go into, which is kind of transferable. So you can swap jobs in there, but every single one of those seats, there is a load of people with their eye on you. Yeah. Think of what banks do. Banks basically get given billions and billions and billions to put into their accounts and use as they see fit. They can lend it out to people as mortgages. They can give people interest on it to encourage them to give them more of it. They can get part of it and give it to banks, other banks, and lend it to them. There's all sorts of things that go on, but every single penny that lands in a bank, their job is to return a bigger amount of pennies than they get given. So every single trading desk job, regardless of whether it's commercial, account executions, whatever it is, their job is to return more than they get given. There is always somebody there that says they can return more than you. Yeah. So you are constantly looking over your shoulder, and your job is always at risk. Because if you can return 10%, there's someone else sitting down there that's just shown the manager that they can return 12. 12% of $1 billion is more. That's it. So do it yourself with your own capital. You only answer to yourself. You can use more risk or less risk than you want. But if you want to learn how it works, yes, banking is the best place to go. Not much fun. Thoughts on the Euro CAD? Come on, DAX, do something. So I'm short Euro CAD at the moment. Extended on the hourly, or it was. It's coming down now. You've just had a reversal alert on 5-minute this morning. But anything you do with the Euro CAD today at 1:30 is going to change, because at 1:30 is the Canadian CPI figures. Banks, it's like working as a BMW salesman at present. I've no idea what I've got a BMW. The salesman didn't have to sell it to me because I just like the car. Picking up the Lambo, I wish. Morning, Rajiv. Abdul, at first, did you start with your own funds? No, own funds, always own funds. Prop firms didn't exist when I started trading. They did, but in a different form. Prop firms existed as a desk in London where you went and sat. You paid them typically something like 2 to 5K a month to have a seat at that desk. A little bit like the banks, yeah? You go into a prop firm in London. There's not many left anymore, but you go into a prop firm in London, and most of the people that go and work in prop firms in London are ex-brokers. So they've worked in banks or they've worked in brokerage houses. And basically, they will pay 2.5K for a desk, and that desk will have computers on it. Yeah. And they will then have to prove with their own capital that they can return on their investment. And then the prop firm will allocate a percentage of their capital on top of their capital to bolster their capital so they can earn more money. But it costs you 30K a year just to sit at the desk. Yeah. And you need money to trade with before they will give you money. And there's only about 20 desks in an office. And there's a lot of people coming up to them with their P&Ls going, hey, this is what I can do. Okay, give us 25 grand and prove it. That's what prop firms really do. Real prop firms, not the prop firms that are online. EA, my Forex funds. They're demos. They're selling you demo accounts. Same business model, but the risk is all on you. Well, the risk is, they say the risk is all on them, but their target isn't people that know how to trade. People that know how to trade have got their own capital because they know how to trade. They know how to make money with their own capital. Prop firms are restricting your income by restricting your strategy execution, aren't they? Yeah. You can only have 5% of drawdown a day. Well, I've already done that today. It's just, why restrict me to 5% of drawdown? I've got 100% capital to play with. Yes, there's risk involved, but at the end of the day, you can't do it on 5%. Knew a guy from Wall Street. They just fired the worst 10% performers in a quarter, no matter how good they did. Yeah, exactly. That's exactly what happens. There's always a bigger fish. It's all about money. Money makes money. And if you have somebody that can make more money, that person gets the job. What attracts? It's the same when there's I can't remember the name of that series. Someone will tell me what the name of the series is. It's based in London in a bank, and a load of college graduates go and start there as interns. People wanted to call it business, but it's not called business. Can't remember what it's called. There's a TV show, basically. I think it's done 2 seasons, where it follows interns going into the banking sector. Industry, that's it, outro. It's called Industry. That is exactly what I've just been describing to you. Not Billions, no. But Billions, look at Axe, yeah? Axe was the same, wasn't he? Yeah. You lot make me money now. No? Out. Literally, you're fired. Security, take this guy out. Put someone else in that seat. Because I've got billions and I need you to return me more on my billions. Banks do exactly the same thing. Industry. If you want to know how this industry works, watch Industry. It's a very good kind of fly on the wall, if you like, as to what happens when you go and join a bank. The constant snorting of cocaine and drinking alcohol throughout the entire day might be a little bit of an exaggeration for theatrical purposes. I don't know, but is there any prop firm you know of? Axia Futures, yeah, I mean they're one. There's a few. There's a few out there, but you won't find them very easily, outro, because they don't need to advertise. Because there is an absolute queue of people that want to join that are professionals out of the banking and brokerage sectors. They don't need to advertise for retail traders. They're not interested in retail traders. They're interested in people that can trade. 95% of retail traders can't do it, can they? Those figures are published on the brokerage's websites. Yeah, 75.5% of people that trade with Axie can't do it. Yeah. Prop firms aren't interested in these people. Prop firms are interested in people that worked here. They know how the industry works. Totally different. DAX is doing exactly the same as yesterday. We've got nowhere. I'm going to leave this on. The risk up there, $600. I'm just going to leave this on and just watch it basically and see if it goes anywhere. But at the moment, we're not going anywhere today. Again, I should imagine we're waiting for CPI. Just not going anywhere, are we? There's no volume here. All the volume's going into the yen and into the New Zealand dollar today. And it looks like some coming into the CAD now as well. Canadian's starting to power up. Let's see what CAD Swiss is up to. CAD Swiss is powering up as well. A little bit. Not a lot, but a little bit. How much roughly do you think you've lost before becoming proficient? 5 figures plus. I blew. My first account was a grandish. That went very quick. My first proper account was 5K. 6 weeks, 8 weeks, maybe that lasted. A bit longer than that, maybe. And I've had multiple 5K blows before I figured it out. And it wasn't the fact that I didn't know what I was doing. It was the fact that I was trying to do it with that. Because you can't pay a mortgage with that. Because the only way you pay a mortgage with that is by doubling it. And nobody makes 100% a month. That's the problem. That's when you figure it out. When you figure out that you haven't got the money to do this. That's when you figure out how to trade. Yeah, everybody can do this. Yeah, you press the button to go long with a percentage small enough of your account that it can't possibly break your account, and you just wait for the market to come back to where you need it to go to put that down there. That's when the penny drops, and then you realize, yeah, I really need 30K plus for this job. You can't start a business on less than that. You can't train as a doctor or a pilot on less than that. Why can you become a trader on less than that? You can't. You can't earn the same money as pilots and surgeons without spending the same amount of money to get there. Unfortunately, in this job, you don't only need that. You also need something around about that for courses, something about that for indicators, EAs and crap that you're going to buy along the way. And you're going to need somewhere in the region of that to blow to realize that none of that works. So it's going to cost you 25K in education and account blows before you realize you need double what you've just blown to actually start to make maybe 10% a month, which might just about pay your mortgage. Not very glamorous, is it? Certainly not buying a Lamborghini with that, but that's the real world. This is why people go to prop. Brokers, ex-bankers, have their own capital. So, yeah, I don't know. I have never added it up. Never added it up. It's a lot. If I knew what I knew, you know, all these people that do these videos and books about, if I knew what I know now 10 years ago, I wouldn't have done anything different, because until you go through the blowing the accounts, you're not going to learn. You've got to blow the accounts to learn. Yeah. That time where you go long, don't use a stop loss, go long again, don't use a stop loss, go long again, don't use a stop loss. 3x by going long again, don't use a stop loss. And then you're 50% in drawdown on your account and go, screw this. I can't sleep tonight for 2 nights running. Then it pushes up a little bit and you take a bit off, and then it pushes down and you put 5x in. And then you wake up that next morning, you've been margin called and they've shut your account down. That's a learning experience. If you do that with 2K, you've saved yourself 10K on courses. That's the best lesson you'll get. Realizing that you need to be in with tiny, tiny, tiny bits of money, because 1% risk, 1.5% risk is too much. It's far too much. You get it wrong 10 times, 10 to 15% of your capital has disappeared. Ask any businessman that has started a business. If in your first month you made a 15% loss on your capital, what would you do? Shut the business, go back to square one and realize that wasn't working. You wouldn't carry on trading, because in 6 months' time, you're bankrupt. Nuts. Why'd you do it here? Nuts. This is a business like anything else. Stupid. We're stupid. Have you watched the new Dumb Money film? Good one, outro. Exactly. Dumb Money. No, I haven't. Dumb Money. Is that the one? I don't know what that is. No. I heard that one. Is it a YouTube film or is it? Oh, that. Yeah, no, yeah. No, I haven't watched that yet. Is that the one about GameStop? Or not? No. No, I haven't watched that yet. I've seen trailers of it, but I haven't watched it. FTSE hit 2 RR short, is it? Wish the DAX had. You know, again, picking your instrument. People trading the FTSE have just made beautiful profit this morning. People trading the DAX haven't. Yesterday, people trading the DAX might have made, or not yesterday, didn't, but another day, you'll trade the FTSE and make a loss. But if you'd have traded the DAX, you make a win. There is no continuation. There's no one thing you should do. You do something and you wait and see what happens. That's all you can do. What's going on with the pound? I have no idea. Nothing at the moment. We've got no news on the pound. We're stagnant. Outro. Have a look at I can't even say that one. Hell Dental and Co. Is that a prop firm, is it? In the Netherlands? Yeah. Prop trading rethinked. That's not very good English, is it? That's obviously translated. Rethought. Prop trading rethinked. I like it. Let me just correct that for you. There we are. Get 50,000 trading account. We guarantee you 5,500 in profit within the first month. Yeah, I've not heard of these guys, but are they just another online one, or? Are these one of these that you need to follow their trading strategies? Because a lot of these prop firms as well, when you go and kind of audition for them, they want you to trade the way that they trade. So they basically they want to mold you into what they know works, obviously, so that you don't do stupid things. There you go. There's the ladders. Look. Yeah, that's what you trade. Ladders. No charts. You can have charts. You can look at charts. Good for finding support resistance levels, but that's what's happening. It's all futures based. DAX is testing highs. So this is the critical level on the DAX. Yesterday's high, last week's high, or Friday's high. So see if we get limit orders triggering here. If we break this level, we're off. So I'm out. But if we reject this level, we've got a good chance of another drop today. So watch this, see where we go. Industry, another binge watch. Yeah, Industry is a binge watch. Once you start watching it, the best scene in that is when she's trading non-farm payroll. It's brilliant. Like, I won't ruin it for people that haven't watched it, but trading non-farm payroll in a bank with a large account, every tick is like $10,000. It's ridiculous. Dumb money is GameStop and AMC, yeah. Success has a lot to do with pain. It does. Yeah, well, that's the thing. You learn the best lessons when you lose the money. Yeah. And then you suddenly go, I get it. I'll have to watch that, Dumb Money. Haven't watched it yet. Don't think it's out in the UK yet. Oh, right, okay. I've seen trailers, but I've probably seen them online. So I don't know. I will watch it. Always up for a trading film. Can't go wrong. Yeah, we're all Dumb Money. Borrowed my mate's dodgy fire stick. Don't want to know. There's the limit orders coming in. So these guys that have been selling this level, having another crack at selling this level. So we need to see if we're getting overpowered by buyers today. This is the third day attempt at this. So it's our third day knocking on the door of this level. So if they get through, could well go today. And obviously if we go today on the DAX, it's very hard to pick an upside. Until ADR. So we've got these two old levels, but that's the level I'd be watching ADR today. And if we break ADR, we're doing the gap fill. So we'll see. Hopefully not. Yeah, anyway. So that's all I've got for you today, really. As I say, DAX, that would have been target. So that would have been my TP hit on the long. So I would be out now with one and break even instead of in a $500 loss. And again, you know, the EA has never traded that before because that's never happened before. So that was my decision today. Wrong one. Yeah, so if we break that high, I'm just going to get out with a loss and then cancel that sell stop. If it does reject this high, though, and comes back down, I will add and see if we can get a run down to yesterday's low. Because if we reject that high again, there's absolutely no reason why we shouldn't get similar price action to the last 2 days. So you'd be looking at whatever we've done previous days, basically, from that high. So that's the pullback from the high. And that's the pullback from the high that we've had so far. So if we reject again, that should be easy. That is on the cards as well, which is that previous resistance, which was previous support. All the same levels. My big issue with psychology right now is I find I'm often not satisfied with the gain I make when I close a trade. I keep looking at what it could have been. Don't look at it. That's the only advice I can give you. Don't look at it. I'm not looking at oil today. Yeah, I'm done with oil. I got out of oil yesterday. Where it goes from now, I don't care. If it now goes up to there today, goes up to there today. Doesn't matter. It's done. It's in my P&L. It's banked. Just don't worry about it. Bank money. Be thankful you've banked money. The good thing about showing trades on the chart, and this is why I built the show trades into the support resistance propulsion indicator, is it is good educational for telling you if you're getting out too soon. Yeah. So if you look at trades, not yens because I haven't taken any euro pound for ages. So this one here, for example, on Euro New Zealand, utter mess, this short, got out perfect. That long, got out perfect. That long, got out perfect that day, but could have held it another day for twice as much profit going into that propulsion gap, which is where my initial target was. All of this will tell you that, yes, you were right, and it gives you confidence in your trading, but whether you hold a position or not is never going to change. I know I get out too soon. I've always got out too soon. My entire trading career, I've got out too soon. I got into a long there and got out there. It went there. Yeah. I'm needing to pay bills. I'm not looking for the, hey, I got that from there to there and post it on Telegram. That doesn't pay the bills. What that does, that causes me stress for a week because every time this thing puts a bearish candle in, I panic. Yeah. I want to get out with money. What I know and what I've seen happen over and over again is market structure playing out for eternity. And it will continue to as long as there's fear and greed and banking. That is going to happen. It's going to go down, and as soon as it's gone down far enough, it's going to go up. Because if it doesn't go up, the banks can't make money. That's how they make money. So when I get into something and it goes down, I don't worry. When I got enough that I can pay the bills, I take it. If it goes up to there, I go, crap, I could have bought X. That's all you should really do if you look at something like that. But be thankful that you've got that. Yeah. You've turned, if you're doing it right and you're position trading, you've turned red into green. And if you continuously make green, you're doing your job. You're not working in a bank where you make 8% and the guy next to you makes 10 and they go, right, if you don't make 10 next month, that guy gets your seat. It's your money. You do like what the hell you like with it. Yeah. It's making money. If you're not making enough, the solution is to increase your account size. That's it. Because that's what makes you more money. This is why I teach in the bootcamp. It's day one bootcamp is about how to measure success. Yeah. How to measure success. Yeah. And it's all to do with percentage. A percent is a percent. Yeah. Somewhere in there. I don't know where it is. There you go. Yeah. So this percentage growth. Yeah. Whether you get out there and it moves to there or not, if that is enough percentage growth on your account that you are happy with it, that's job done. If you're happy with, if that, for example, there is 0.25% and you're not happy with it, double your account size and that becomes 0.5%. That's all you can do. Money makes money. Yeah. Higher risk makes more loss and more stress. Higher balance increases your return. Your percentage is always going to be the same that you're going to return, but 10% of 10 grand is not as good as 10% of 50 grand. That's all there is to it at the end of the day. If you've only got 10 grand to trade with, you're going to be limited to what you can earn. Nothing you can do about that part of psychology. It's just not fixable. One thing you can do if you're getting out too soon, which is what one of my old mentors taught me, if you're trading H1M5 or H4M15 strategy and you're entering on this time frame, only look at your charts twice a day. Yeah. So look at the charts once in the morning, look at the charts once in the evening. If you are constantly watching this and this hits this propulsion gap, yeah, and you're short, let's say you're short from here, right? And it hits this propulsion gap and you see it starting to bounce, you will get out. If your target is that double bottom and you don't look at this until 5:30 this evening, you will have given that a chance to get there. Because watching this chart makes you exit early. If you shut your charts, you can't see them. If you can't see them, you can't close it. If you can't close it, you can't get out too soon. But then your next problem is it hit that propulsion gap and it bounced up to there. And you gone at 5:30, you open it up and go, oh, crap, I had an exit at 1% there. I've now only got 0.3. So you'll tell yourself that you need to watch the charts. Then you've got a different psychological problem to the one you had of closing early. There is no solution to it. Your job is to get this green. That's it. Forget what's happened in the past. Should I have got out of that long there? On that day, yes. No. But at that point in time, I should have, because that was worth 0.35% on my account. That was worth 0.7% on my account. But at that point in time, I needed 0.35% because I had nothing banked. So I took it. At that point in time, one of two things was going to happen. During that day, it was going to do that or that. As I have no way of knowing which of those it was going to do, but I know that I can put $350 in the bank right now, I decided to take $350 because my car payment is $650 a month. So that's half my car payment. And I basically got in the afternoon and got out in the morning. Yeah, for half a car payment. Take the money, forget about what happens after it. Wait for the next setup. There hasn't been one, so I haven't traded it. Just trade the plan. Forget about everything but what works. When the market's pushed, it will at some point pull. Take whatever the market gives you that you're happy with at that time and forget the rest. There's nothing I can give you as a mechanism for doing it. Look at this thing. I sat in this for 10th of October until the 15th of November. I sat in this thing. Shouldn't have taken that off. Shouldn't have taken that off. If I hadn't have taken that off and that off, I'd have taken the whole thing off there. But I didn't. So I had to sit through it for another 2 weeks. That was the wrong decision to make. The only reason I made that decision was because I was looking at the chart. If I hadn't have looked at the chart, I wouldn't have looked at it again until the next day, and I'd made that much more money. How do I know when it's the right time to look at the chart? You don't. You can't. There is no way of knowing, is there? Look for where price is going. We know where it's going because we see where the footprints of the banks are. So when it gets back to there, just take the money. If it gets back to there, great. But take the money if you've got it. Look at these US trades I've got at the moment. Not that one. Yeah. That's where I think it's going. Right? But to get there, it needs news. Right? This afternoon, if the Canadian moves it to there and I'm watching it, I'll take it. If this afternoon the Canadian takes it to there and I go to my spin class and I come back and Powell has said something and it's there, I'll take it there. The reason of me taking it there or there isn't me. It's whether or not I'm watching this chart. If I'm in my spin class and it doesn't get there, I won't take it. Yeah. If I'm not in my spin class and it gets there, I will take it. If it gets there and I'm asleep, I won't take it. If it gets there and I'm awake, I will. That's the decision for me getting out of a trade. Nothing more. I'm either looking at it and I can see a bank balance that gets bigger or I don't. I don't know where it's going. I've no idea if it's going to get there. I've no idea if it's going to get there. But I do know if it gets to there, that's where they sold it from 3 times in the last week. And that is going to be worth something in the region of 0.3 to 0.7% profit in my bank account that I can use to pay my car. I'm taking it if I'm awake. That's the decision-making process you have to have. And if it goes up to there and you kick yourself about it, you've just got to try and stop that. That's where I think it's going as well. But probably won't get there. I would have been 1.5 hour up on the DAX, but closed under 1 hour, yeah. Because you didn't know. And look what's just happened, everybody. Yeah. When we got there, the odds were that or that. But that happened, which is great. So the difference between me making money today wasn't me, was it? It was the iceberg order sitting in Barclays. Thanks, Barclays, for that. No idea if it's going to happen. But again, these are the things, as I say, you can't teach this stuff. I can teach this stuff until I'm blue in the face. But until you've seen this stuff happen 100 times, you won't believe it. This is why people spend money on courses over and over again. You buy a course that teaches you support and resistance. You'll do the course and then it will fail 3 times and you go, that's crap. I'm going to do this course on supply and demand, which is support and resistance as a box instead of a line. You'll do it 3 times, it will go wrong. You go, that's crap, I'll throw it away. You'll blow 3 accounts, come back, and then you'll suddenly realize when you look at the chart on the next course that they're teaching you support and resistance again, but they're calling it something else. And that seems to work. And then you'll suddenly realize, actually, sometimes it does and sometimes it doesn't. It's nothing to do with that indicator, strategy, system, whatever. It's the fact that sometimes it will and sometimes it won't. And if I hold it for more profit than I lose, I make money. That's it. But until you've blown the accounts, you've spent the money on the courses, you've bought everything, you won't realize it. You still need stuff to tell you what to do, yeah? So, you know, I sell indicators and EAs for a reason, because these are what make me money. Yeah, there is no success. I got asked again yesterday. I get asked virtually every day, what is your best indicator? What is the highest success rate? What is the strike rate? I don't know. All I know is when that gets over there, there's a very good chance that it's going to do that at some point in the future. I have nothing more I can give than that. And all this does is it tells me there's an opportunity. And all this does is it tells me that the guys that are giving the opportunity have actually made their move. I have no idea if these guys have got enough oomph behind them to make me money or not. It's not me making the money, it's them making the money because they move the market. All I've got are indicators that tell me that they're in control, and this is the point they normally make their move. Whether it happens or not is always the same. That's your odds every time you press the button. It takes a long time to learn it though. If I'd have known that 10 years ago, I still would have blown all the accounts because I wouldn't have believed myself. And this is why I don't expect most people to believe me. This is why I built the Bootcamp, to tell you what it's really like. That's the only way you can make money in this market, because it's totally random. How can you make money out of something random? By literally taking more than you give. If you stop giving, you can only take. Remove the stop loss. What can you not do anymore? Lose. Holy crap. That's what the banks have been doing for nearly 100 years. It's really simple, isn't it? But nobody believes me until they've done it. And the people that have done it and stay in the Telegram group and come in here every day and have been doing it for months suddenly realize, shit, that's how it works. There isn't an indicator on EA. You have luck. It's all luck. It's not much the greed, more the fear. Fear and greed. Look at this slide. Every single person has this. Your fear of missing out. Not being able to hold on to winning trades. That is fear. Getting stopped out on most of your entries is greed. Yeah? The reason you're getting stopped out on most of your entries is because your stop's too tight. Why is your stop too tight? Because you want to get as much size on as possible because you're greedy. Trying to pick the pullback point in a trend because you're greedy. You want to get the entry so tight that you make an absolute fortune and you can buy a Lamborghini. Everything is related to fear and greed. Every single one of these things. Yeah. Moving to break even and getting stopped out on a pullback. Fear of losing money. Revenge trading. Greed. Everything is related to fear and greed. You will never, ever, ever remove that emotion because you're a human being. If you can't remove the emotion, remove the thing that causes the emotion being triggered, the stop loss. That's what does it. Should I close this? Why did I close that trade? Because I was fearful of the market going higher. I could see that's not right, is it? It's more of a greed thing, that one, isn't it? Shutting there is more of a, but that's not either of those emotions. There was no emotion in that trade. It was literally, I've seen this 1,000 times before. What normally comes after that is that. It's just we didn't get the follow through today, did we? That was not really fear or greed, was it? That's a load of rubbish. But, you know, it's experience. That's what that is. It's just seeing it 1,000 times. Go in the strategy tester, let a chart play out for a year and watch it. You'll see that 100 times. Once it's burnt into your retinas, you'll do it. You'll just do it. It's automatic. But you've got to do it with an amount of money that's not going to hurt. I'm up 16% on the month so far. So what are you complaining about, AZ? Look at my P&L and look at your P&L. You're up 16% this month. Good for you. I'm not. Lecturing to the converted. These yens are worth longing yet, or better to potentially, I don't know the ends. I really don't know the ends. Look, that is what a setup. Look at that. 2 monthly levels, an old propulsion gap, all at ADR. We've hit it, put in a 3-bar reversal, my favorite reversal candlestick pattern. Pull, pause, push. Yeah. We've retested. We've done a stop run. The limit orders have triggered the second time. So the guys that bought this level back there bought it again, and they bought it again. We're about to get a reversal alert, and we're due a pullback because we've been dropping for 3 days. Do you need any more confluence than that to go long on the US dollar yen right now? Probably not. That's probably the best setup I've seen this month. If you want to take it, take it. What's the worst thing that can happen? It can go down. What are you going to do? Add another position and wait for it to go up. Up to you. I'm not taking yens at the moment because I just don't want to hold them because it costs me too much money at the moment. I want to wait for the market to settle down. That's just me. I have no problem taking that though, because look at that. It needs a profit take, doesn't it? That needs that. That needs that. That needs that. If it doesn't do that, they can't make money. It will do that. If it doesn't do it here, it'll do it down here. So if you want to get in there, that is a brilliant confluence setup. RSI is extended on the hourly. RSI is extended on the 4 hourly. RSI is probably extended on the daily. Not quite. But yeah, it's just beautiful. Is it going to work? I haven't got a clue. Really haven't got a clue. It's going to go up or down. The truth is not very popular. Yeah, of course it's not. Will there be a Black Friday sale? Yes. Guess when it'll be, Max? It'll be all weekend, basically, Black Friday. Thing that makes me feel better is every next tick in the market has got a 50-50 chance of going up or down. So if I exit, now it's just as good a decision as if I don't. Exactly. You've got it, AZ. You understand it. All you can do. You're never ever going to get the exit. Yeah. One of my mentors, the thing that really stuck in my head from one of my mentors was, when you get a move like that, if you can take that out of it, you're a success. Yeah. That's a big move, right? If you can grab that much profit out of a move that lasts that long, you've cracked it. People that are failing are trying to grab that and hold it to there, because you cannot determine when that is going to happen, and you've no idea when that's going to happen. Right now, as I've just explained, for 1,000 reasons, that looks like it. If it isn't, everybody that's going long is going to stop out and lose money. Everybody that's got half a brain is going to go long and wait for something to happen that will give them profit. They're just not going to use that. That's all there is. Go and ask a bank how they place their stop losses. Go and ask. If you find anybody, go and walk into London. I'm going up to London on Friday, right? Go and take the family. Well, I'm taking the family there. They've organised it. I don't know what I'm doing. I'm paying for it. But we're going out to London. I have no idea what we're going to do, but I can walk into the banking sector, and you could go and ask any banker that comes out of a bank, are you a trader? And when you get one that says yes, say, how do you place your stop losses? And just see what his reaction is. A what? Is what he'll say? Stop loss. What? Stop loss. How do you stop losses? Well, get out. When? When it doesn't look right. Why? Well, depends what the other desks are doing, because the other desks are the ones that move it. So I wait for them to tell me which way it's going. That's how it works under the hood. That guy knows where it's going, but he doesn't know how far it's going, because there's 10 banks moving it. he's only got one of them. And if his one has got 25 million to go long on, do you think he's going to go short or long? If he's short on it and they've got 25 million to go long, do you think he's going to exit or stay in the position? They know which way it's going. We don't. You cannot pick that. But you can see when they are there and what they do next. The only reason you can know that that is going to happen is because that is what always happens. Always. Dare you to go and show me a chart it's never happened on. It doesn't exist. You just got to be able to hold the position. Till I'm blue in the face. Oh, you're laughing too, blue in the face. Position trading is counterintuitive, very counterintuitive. Yeah, that's why most people don't last. That's why I say in the bootcamp, give this a month. No one can give anything a month. If it doesn't work within a week, they're not interested. That's why they don't make it. That's just hearing you speak trading facts. Yeah. Good to talk about them. I find it fun. When you're on the other side and you've been through the mill, the journey, yeah, the stages on the website, in the PDF, when you've been through those 5 steps to becoming profitable and you're on the other side, it's such a smug place. It's just everybody you look at and everybody that contacts you, like the spammer we had yesterday in the Telegram group. Who's the investors here? Why are the investors not talking to me? And then you look at his profile and he's like, professional trader, instant payouts and withdrawals. You're a scammer because you haven't managed to get from here to here. So what you're doing is you're continuously going from there to there and you're bouncing between the two, losing money. So what you've decided to do is pretend you can do that and then sell it to everybody else. 99.9% of people are doing that. When you have had that happen to you so many times by blowing accounts, buying courses and doing all the wrong stuff, that you suddenly realize that it's a smug place to be. And it's an easy job. It's such an easy job. It's frustrating as hell, but it's easy. Because when you realize you have to relinquish control and you have no control over something that's making you money, you just make money because you forget about it. You can't be asked. CAD Swiss is going up at some point. I don't know when it's going up at some point. I took a bit of loss on it yesterday because I'm wrong. At some point it's going up because it's gone down. Simple as that. I don't know when. Hopefully 1:30 this afternoon. If it's not, it will go down and I need to add more to it. But it will come up at some point because the banks have got to make money. That's it. That's how the industry works. US dollar yen long. You can get the swaps. It won't cost you money. True. It's nothing. I mean, that would have already triggered this morning. So, yeah. Banks bought that again. That's our next line in the sand. Yeah, I mean, that US dollar yen is a great trade. Everybody that went long off that support bounce thought it was a great trade as well. But when they placed their stop loss under there, they didn't think it was good anymore. Now they've missed it. So they've got in with 2 times the lot size there on a lower high. I don't know what's going to happen, do I? But I just like it as long. But look at where it's going, yeah? So always plan for the worst case scenario. If this trade doesn't work, where's it going? Down. If it's going down, where's it going to go? Yeah. So plan. That doesn't work. Get in again and again and wait for it to profit take that move. But that's a hell of a move. I mean, it's not going to get down there without stopping. That's the, I mean, well, it might do. But that would be a proper big move, wouldn't it? So this is a good spot. You should have probably been in it already a couple of times by now. So it's a good entry, really good entry. I'm just not playing with the yen at the moment. Personal choice. Smug place. Yes, AZ. It is a smug place. It's a nice place. People think I come across as patronizing. It's not patronizing. It's just my way of making people listen. Might come across as patronizing sometimes, but I am the sort of person that doesn't suffer fools gladly. I can't be bothered. When I explain something in a video and someone comes and asks me the same question twice again, I can't be bothered. It's not smug. It's just can't be asked. That's my attitude. But only because people don't listen. I was one of those people. Some of them listen eventually. That's it. All you got to do is listen and learn. People aren't willing to learn because they want a Lamborghini. As I've said many times. Anyway, I will carry on with my day now. So I'm just going to monitor the DAX. So basically now we've done that. That's confirmation for me that that iceberg is still there. It's not confirmation that we've got enough to go short yet. But if you want to, if you are short, you could move that down and take a little bit of risk off, because we should see that propulsion gap hold now. That was a big order. They should add into that. We shouldn't be able to get through that. But that's the safest place to put it, so I'm going to leave it there for the minute. I'm going to add... I'm actually going to add on a break of the pre-market low and to see if I can get some traction south. So target there is not a lot, but it's something. And then the second position I'll hold down to yesterday's low. And that'll be me for the morning. Will or won't work. Right, I'll be back this afternoon at 2:20. Anything you need, I'll be in Telegram. There's nothing much else moving this morning, so it's just a case of waiting for 1:30, waiting for that CPI figure to come out. When the CPI comes out, we should get a decent amount of movement. We've got home sales at 3, half an hour after market open. We've got Lagarde this afternoon. Then we've got FOMC this evening. So there's a lot of volume coming this afternoon. We've had a fair bit of movement, obviously, this morning on the yens and the New Zealands. So hopefully it's the US and the CAD's turn this afternoon. And everything else is just sort of a fair bit of movement, but nothing ADR wise. So no big moves on any of the other currencies at the minute. So we'll wait and see what happens. I'll be in Telegram back this afternoon, back tomorrow morning as usual. Anything you need, let me know. Otherwise, I will see you guys next session. Have a good one.